How's it going? Welcome back, it's Jonathan. In today's video, we're going to be covering three core topics. The first one is the Evergrande issue, which is China's biggest and most indebted company. They're $300 billion in debt. It's quite spectacular. The second one is we're going to take a look at the Bitcoin charts, and the third we'll finish it off with a quick squiz at the Dow Jones. Now, if you haven't already and you believe that you're either a trader or a hodler of the cryptocurrency market, I've got a very special report, which is also a forecast which goes into what I believe is potential to occur next year. So for the whole year, we're going to be taking a look at the possible direction of Bitcoin. I've created a very special report. I've left the link in the description below. Currently, it is included free of charge as one of our premium forecasting services, though in around 2 months' time, it will be sold individually for $1,000 as we head into 2022. So if you haven't already got a copy of that, you want to just go to the link below, subscribe to the forecasting service, because that's where you're going to go and find this product. And we've already had a ton of people jump into this. They've already taken a look, and a lot of the feedback that we've received is, my God, this has changed the way I look at the markets. This has changed the way I'm actually going to think of actually even investing in 2022. And I want you to have that same experience, because this is the exact same way that I look at the markets, and I want you to get a glimpse of that. So in the link below, you'll see the report, you'll get access to it. It's there, it's ready, it's waiting for you. Let's take a look at the charts right now. So what I'll do first is we'll take a look at the Bitcoin chart, and then as we take a look at the Bitcoin chart, I'll waffle on just a little bit about what's happening over in China with the Evergrande issue. There's not a lot that's changed since the last videos, so that's why I haven't been, too focused on putting out new content, because not a lot has actually changed. Though we've got to keep in mind that what's happening over in China could potentially have a big impact. I'm not saying it's definitely going to, but could potentially have a big impact on the market next year. Now, a lot of people fall into two main categories when it comes to cryptocurrencies. They're either a long-term hodler, diamond hands, all this other jargony words that they want to throw at you, or they're traders, and they're falling into the speculators, the CFD traders, or the future traders, and the wannabe traders. So I don't want to pick on anyone specific. The point I'm trying to get at is there's two groups, and both of them believe that they're right. Well, what I believe is going to occur next year is that the tables are going to turn on the Bitcoin market. And I've detailed this in the report to some degree. The Evergrande issue, though, a lot of people are looking at that market and looking at the Chinese economy, I should say, and saying that if Evergrande collapses, it's going to have a roll-on effect to the rest of the world. And they're also aligning it to what happened in 2008. They're going to call it a Lehman Brothers event. Now, I'd just like to point one thing out. Where we are based on a longer-term cycle, which is around 20 years long, we're at the halfway point of that cycle now. The current economic cycle that is playing out in the US is not signaling any major economic collapse. But there are a few things that are playing out, and it's the midpoint of the cycle, which is the mid-cycle recession or the halfway recession, whatever you want to term it. There is a recession that occurs in the midpoint of the cycle, and towards the end of it is when we get our major economic collapses or depressions, major worldwide issues occur at the end of the cycle. So with the Evergrande issue, it is not going to be, in my opinion, a Lehman Brothers event. There are definitely large companies that can go bankrupt in this point in the cycle, so that's definitely okay, and it may occur. But what might happen is, with a lot of people looking at it occurring this year, I think it might actually occur next year, and I think that it might be the black swan event that may send the economies south next year. So whilst we have the coronavirus issue playing out now with a lot of the recessionary implications in economies, I think that the event that would take us south next year are definitely going to be bankruptcies of major companies. So we'll just keep that in mind, because when you read through the report for next year, either it's for the Dow Jones, the Aussie market, or Bitcoin, whichever one you choose to subscribe to and invest alongside, there are going to be events that play out, and I just want to show you how you put all the pieces of the puzzle together and how you start to look into the future. It's something I'm learning every day, so I'm definitely not like an expert. I definitely would reach out to people that are much better than me, and I hope that you do the same thing. So it's just something that you should be looking into, okay? So I'm going to just stop talking about the Evergrande issue right now, and we'll take a look at the Bitcoin chart. Now, since we last spoke, let's go ahead and just drop it on. Since we last spoke, this is the sort of time period that we were looking at, where we had the market run up, it's run down. Nothing has majorly changed here. So we're still, this significant low that I put in, which was around the 21st of September, has still held. We have the other lows that are definitely around here, which have still held. Go back and watch the other video, because it's really going to recap my thoughts on if Bitcoin turns south, where are the major support levels. I don't want to go over them right now, but these levels are still holding. So that's very important. But it's also a bit weary, because you got to start to wonder that once the market starts to move below these levels, the market can really just push lower. But definitely a lot of the issues that are occurring right now with the issues in China and things like that, they are sending us sideways. And if you've been around for any time, you'll know that the call for the market post-September into October was higher highs, lower lows, and majorly a sideways action of that. So we've got higher highs, lower lows, higher highs, lower lows, and just producing those sideways. So you're probably thinking, what's a higher high, what's a lower low? Well, essentially, these sort of moves like that, that is considered a higher high. And then these sort of moves, you'd have to actually break this section here to be considered a lower low. But if you bring this section, let's go ahead and clean it up. This high to this low to this high to this low is considered a lower low move. And then these micro moves, you can be considered higher highs. But in short, the premise of the theory is that we're going sideways until around October, when we start to get our turn higher. Now that's just based on the forecast. It's not based on any specific research I've done. I'm primarily using my main indicator as the forecast, and that's the exact same indicator I'll use next year. My primary indicator is the forecast, and then I overlay price and time and all these other forms of analysis like Elliott wave and so forth to build the complete picture, okay? So now with respect to the weekly chart, as we can see, you may remember from the last time we spoke, any black bar which is at this same point as a blue bar is considered the main part of the trend. Now, I spoke last time that when we get these red to green shifts, that is a change of trend, okay? So those ones are changing in trend. But once we get the red to green, or the red to blue, sorry, we don't have a change in shift. So a change in trend, sorry. So this whole move here, up into the blue, and then down, whilst the price is actually technically falling lower, based on Dow theory rules, it's still part of the main move. So there's no current down move in the market, and we're still in the overall, if I draw a bubble around this whole move is technically still up. So we'll keep that in mind, because once this goes red, if it does go red at all, then that is a change of trend. So we need to just consider that. All right, so with our monthly chart, we are now sitting on our higher band. We just want to make sure that we don't cross below it. That is important. This low here was created around the 21st of September. So we just want the market to remain above it for as long as possible, because then that will strengthen the outlook for the end of the year. Unfortunately, with our swing charts, we have been posting lower lows. We haven't got a break below this low just yet. Once we do, that'll be another daily break. These lows here are our September 21st low, and we have had obviously a break below this one, which is currently pointing down for the Gann swing. So currently speaking, the weekly chart is bearish and the daily chart is also mildly bearish, so we've got to keep that in mind. What you'll see now is that as we move through sideways patterns, as the market moves sideways, high highs, lower lows and so forth in a sideways overall trend, you will get choppy actions. So it can appear to be bearish even though the market is still sentimentally bullish. So we'll just keep that in mind. Now, again, with the Kagi chart, we have moved down. We are now red, technically bearish, and with our daily Kagi chart, we're also bearish. We'll keep moving forward. Price, this is the interesting one now. Actually, my data hasn't updated yet, but we do know that price has come out and it's still stabilizing across, and it is currently above this orange and red box here. We want it to remain either inside that or above it for the longest amount of time, and the longer that it can do that, it would signal our sideways market movement, which would strengthen the move to the upside because it would create a layer of support, okay? The only downside is that if it does push below it, it does have an overhead resistance, which could mean that there is a lot of people who are looking to sell once it gets back to that level, which could make it stay under that level for longer. Though I will just put it out there that I think that the bias is still towards the upside over the downside. Regardless of that, all these other people coming out and saying that the downside is stronger now and that they're still looking at $20,000. Some people looking at $14,000 for Bitcoin. Next year, possibly, where there's the sort of end of cycle retracements. So next year could be possible, but I don't think just yet. Now, I'm happy to be proven wrong. This is not a game about being right or wrong. It's all about probability. So I'm just trying to look at what's most likely to occur. So if the market does come down below these levels, then I would be open to suggesting that lower prices are definitely on the cards, which I spoke about in the last video. Patterns, nothing still occurring here. We have, so this is daily data. Let's go ahead and switch it to weekly. We have no trend, so I can't draw any trend lines. So there's nothing that I can really do just yet in this section. I'll let the other experts continue to draw patterns and continue to follow them. Feel free to reach out to them for pattern analysis. Respect to Elliott wave, we're still in this safe point here, so we're still at the 50% level. It still can turn up from here, though we can see the market fall down to the 100% level and still be considered part of the initial first wave. So just keep that in mind. I'm going to skip the cycles because not much has changed. We're still moving across. I'm going to move into the mass pressure chart. Now, if you didn't watch the last video, go back there because you'll see how we squeeze this up. But what we're seeing here is we have our September low that occurred in the orange, which is the forecast. Here's the black ones for the September low. And then we sort of had our move upwards and then back down before another move up and then another back down. So there's every high chance market's going to move up and down in this sort of fashion. What we need to make sure is that the market doesn't, or if it does temporarily, that it doesn't move below the 21st of September. Things start to shift once it starts to do that. So I really needed to stay above that, though we'll just have to take it as it comes. But the whole premise, again, behind this whole lower low, higher high formation as we move sideways into October is based on this whole move right here for the Bitcoin cycle. Now, this Bitcoin cycle mass pressure chart, I have taken this and I have moved it into 2022. As I keep saying, that report's ready and it's ready for you to view right now. The link is in the description, but all we're waiting for is for this to play out. Once it plays out, it looks like green sky is above us. By green, I mean the dollar symbols. I know technically the sky is blue, but green for dollar symbols, okay? So we'll just stay with that. Now, we all know that September's an ugly month, and for the last 10 years, it has proven to be an ugly month, though there will come a time where the cycles align that September is actually a bullish month. So I don't want to make you fall for the false assumption that every single September you should be looking, well, you should have looked to sold in August and bought in September, because there will be a month when September will scoot higher in a much faster time frame. And I'm looking for the years such as 2023, 2024, 2025 for this September period to possibly shift as we move into one of the biggest market bull runs we've ever seen. So with respect to the squares, because we're always looking at the squares, nothing major has occurred with the squares. Let's go ahead and make this a bit bigger. We are simply just looking at this 45-degree angle and also this 220-degree angle. It would be good for the market to stay above this 45-degree angle because that's where a major low came in for the 20th, or I should say the 21st of September, so around this time frame. So if the market can stay above this 45-degree angle, to me, we're still in a safe territory. All right, so that wraps it up for the Bitcoin. Let's go ahead and take a look at the Dow Jones. Now, I actually haven't touched on the Dow Jones for a little while, mainly because I wanted to see what was going to play out. I'll just go ahead and give you a quick update on this market cycle for this year. So if you haven't seen this already, we're looking for rising prices at the start of the year, potential decline, another rally higher, double bottom formation. So again, this here, this black one, if you haven't already realized, is what's actually occurred, and the gold one is the forecast. So we're looking for rising prices, decline, another rally higher, then a double bottom formation. Once the double bottom formation fell in, we were looking for rally higher, and as we can see in our actual market action, we rallied higher, and then we were looking for a sell-off, then a bounce, and then another rally higher. What we got actually was our bounce and then our rally higher. And then the thing that I wanted to make note of was this potential market decline. Now, I always said that it didn't matter how much the market declined because we're looking for angle, we're not looking for price. But what I wanted to see was if we were to get a gauge on the actual year in advance, the year was to potentially start slightly above, so it was potentially end slightly above where it started, okay? So the start and the end were very similar, not the same, but were very similar. So most of the run that was to occur in the US should have fizzled out by the end of the year. Now, it wasn't apparent what may have caused this action. You know, we don't look for the events to take place before the year begins. We look to see how the events unfold as the market cycle comes to fruition. So in saying that, this down decline that occurred here has currently played out. If the Evergrande issue is going to continue to play out, we may see lower prices from here, though I think that the major issues for Evergrande, if that is going to be the Black Catalyst event for next year, then I would be looking for that to play out possibly between January to maybe March next year. I think that would be a key time frame for that event to play out. So with respect to where we could possibly be going now, we are looking for potential rally potential. So we could see this market decline because our timing aspect is not fully aligned, but there's potential rally before an end of year sell-off. So depending on where it goes from here, there could be another end of year sell-off, which may put it towards the September low, or it may bring it below the September low. It's a little unsure where it's going to head just yet because this decline was only around 5%, whereas the market forecast suggested around 10%. So we've only had around half that decline. So that's all I have for this update. I wanted to take a look at where we are now and where we may be going in the potential future. I think the Evergrande issue is something to be watching for. There's definitely, as I said multiple times now, there's definitely potential for the market, for this company to crash and also the market to go under next year. I think that everyone who's a hodler and everyone who is a trader should be definitely on the books to be buying that forecast for next year. I think that the timing counts and the cycle that's playing out. If your main goal is to hold and never sell, you are missing great opportunity at compounding your wealth. The whole factor behind the buy and hold strategy is not that you buy and hold indefinitely. There comes a time that you actually sell. So based on what I think is potentially going to occur next year, you have one of the greatest opportunities at compounding your wealth, which means you sell high and then you buy low. I'm not looking at trading. We're looking at capturing the major swings. So we're looking to sell high and then buy low. And if you believe in the premise that cryptocurrency is going to be a long-term runner, then you'd be looking to capture these major moves. There is no point in dollar cost averaging when the market is down. When you've had a position that has gone from $10,000 to $100,000 and then shrunk to $20,000, and then your dollar cost averaging in at $20,000, when you could have taken that position from $10,000 to $100,000, sold it, paid your tax. So let's say you got 70 grand left, speak to an accountant, taking that $70,000, as Bitcoin is now $20,000, jumped back in at $20,000, now you got triple the amount, and then dollar cost averaged again, and then ride the next cycle. There makes no sense as to why you wouldn't do that, yet a lot of these buy and hold people think that their strategy is the best without actually fully comprehending the way to compound your wealth. Anyway, that was my little waffle. I'll leave it to you. The link is in the description if you want to join up and take a look at the forecast. Though, I'll talk to you soon.